Good morning and welcome to the Big O Money Show. I am your guest host this morning, Andrew Galvin. And then with me, as usual, and maybe not last week, but this week again, we've got Mr. Tony Shore, our trusty co-host. Tony, how you doing?
I'm doing great. Andrew, great to have you as the host today. Bill is out of town, busy. And so, Andrew, you're in the driver's seat today. I like it. You and I always have a good time on the show together.
Yeah, I think so, Tony. And it's great to be here again. And it's nice to be back in town. It's been a little bit of a crazy end to September. We were traveling. We were actually up in Minneapolis for the Elite Advisor Forum last week. And
yeah,
that was great. It was good to see everybody at Gradient, Mike Binger, Keith Gangle.
Senior portfolio manager and president of Gradient Investments. Big investment firm up here in Minnesota. And so I know you met with some of the other top advisors from around the country and speakers from, they had people there from a lot of different places, right? Charles Schwab, they had a speaker, and they had Brian Belski, the chief's financial strategist for BMO Banks. That's a big get. Did you get to see Brian Belski talk?
Yeah, so he spoke Friday morning, and that was a really enlightening 45 minutes. It's always nice to hear him talk. And it's sometimes interesting how he starts off. And he said, all right, so we're going to talk for 45 minutes. And at the end, you're going to ask me questions. And those questions cannot be related to Trump or tariffs in that order.
Wow. Okay. He didn't want to get political and he didn't want to dig into the tariff mess. Okay.
No, he was like,
but he loves talking about the markets, where they might be headed, what's going on. And I think that's good. And I think he wanted to eliminate factors that are just complete guesswork and that nobody knows how that's all going to play out. So but he does have a good grip on where companies are at and how things are shifting. So I know it's good to listen to Brian because, and he's usually pretty bullish, pretty optimistic, but
yes, he is.
He's also somewhat of a realist too. And he's done well with BMO Bank as their chief strategist. So I think it's great that you were rubbing elbows with Brian Belski. Talking with folks like him. That's got to be great for you to help your clients, right?
Yeah, it was good. He talked a little bit about, what Bill and myself and Mr. Kaiser and, everybody on the show over the last year or so has kind of talked about staying in the game, right, Tony?
Right.
But making sure that in the game, there are certain sectors or certain places in the market that we want to be invested in. And that was Belski's message to us last week was, let's play certain sectors. Let's play certain companies. Technology remains strong. Earnings are still good there, especially with the AI. And that's not to say that we're not going to have periods where the stocks themselves are going to have a little bit of a pullback, because that's healthy, right? That's a normal market cycle. Things go up and down over the course of the year. So he was still very bullish. I think he said his price target was right around 6,900 on the S&P going into year end. We'll see. But
wow, he thinks it's going to keep going up that much. That's pretty bullish. And again, past performance isn't indicative of future results, and nobody has a crystal ball. But it is interesting to hear somebody who's pretty deep in the trenches and in the know, what they have to say and what their take is on it. And I know that on the show, you're not going to give specific advice or base anything on guesswork, but you have to keep abreast of what is happening out there, don't you?
Right. Yeah. Yeah. And then, we had other speakers, and Sonders was the other big one. And she is the chief market strategist at actually Charles Schwab.
Yeah. That's huge.
They got some heavy hitters, Tony.
That's amazing.
But yeah. And Lizanne was a little bit more muted, and she kind of touched on Trumpy and the tariffs and that type of thing. she said she wished she had done exactly what Belski had done right off the bat, with not taking those questions. But, and it's kind of been the buzzwords for this year, right? Everyone
Sure.
got really, really concerned when the market dropped in April. And then here we are in September, and, we're up, 11 and a half, 12%, and we had a little bit of a pullback this week. So to end the week, but I mean, still, markets have remained resilient. They've remained strong.
Yeah, they keep hitting record highs. It's of course what goes up must come down. There's going to be a correction at some point. We're gonna see volatility.
Mhm.
And what can our listeners and viewers out there do about that? How do you help your clients deal with market volatility? What can be done to prepare for that when it happens?
Yeah, and that's kind of the point, Tony, is that we know it's coming, right? So that's why we want to stay in the game. So if we need some long-term growth, we know that those stocks and those investments are going to go up and down a little bit. So on the flip side of that, we're going to have some things that our clients are invested in that are going to be a little bit more shorter term. They're going to be safer, so we need to have the growth money and we need to have the safe money. And
Right.
together,
And when you say safer, you mean like principal protected, not as
exactly,
risky, right? That's
yeah,
all you're saying is not as risky. And anything that you have that's attached to the market or in the market can go
carries
down.
risk. Yeah,
Yeah.
exactly.
Yeah.
Yeah. So, like, do we have dry powder in checking and savings? Do we have some bonds? Do we have some money market or CD type instruments? Do we have fixed indexed annuities? Any of those things would be considered 100% principal protected for the most part, barring some sort of default by the company that holds the funds,
Sure.
which, that's obviously circumstances beyond our control.
Yeah.
But, traditionally speaking, those have always been safe places to hold your money, right?
Yeah, yeah, yeah. Up until this point, they always have been, and so that's good. And I know if you do work with some of those, you only look at A-rated companies and companies that have checks and balances in place.
Yeah. Yeah.
You take that very seriously and only recommend what's in your client's best interest. And for our listeners out there, it's important to understand what works for one person isn't necessarily for another. It depends on
That's
your
right.
situation,
Mhm.
your own personal risk tolerance, and you have a way to measure people's risk tolerance. So then their asset allocation, it matches that, right?
Yes. Yeah. And so that's the first step. When people come in and talk to us, Tony, we dive into where are you and what do you want to have happen, either as you get closer to retirement or, hey, we're headed into retirement and now we need to figure out what we need to live on. How much money do we have to have each month to pay the bills, do our expenses, and maybe a little bit of fun money, right? I mean, people want to go out to eat. They want to go have some drinks. They want a vacation when they retire. All of that stuff is within reach for most individuals. It's just about setting the expectation of, where do we want to go? And so we have something that we do with individuals when they come in called the color of money risk analysis. And that is a process where we basically quantify your risk appetite and then what we need in terms of growth assets to be able to hit some of those metrics in 5, 10, 15, 20 year, uh, jumps.
Increments. Yeah.
Yeah, exactly.
Yeah.
And then it's just a sliding scale and it may go up or it may go down through retirement, right, Tony? I mean, not
Right.
everybody stays
Yeah.
the same.
Right, exactly. Now, there was a big Fed announcement about a week or so ago,
Yes.
and they finally lowered interest rates again.
Yes, they
And that I think the market had anticipated that, and that's one thing that led to it doing well. It liked that was coming, and now it's actually happened. What a lot of our listeners have been asking you guys is, how does this affect me? People, some people, there's some misconceptions. Are my mortgage rates going to go down so I can refinance? Not necessarily, right? But it does affect your overall financial planning. You have to look at interest rates, right?
Right. Yeah. And I mean, what does that do to the 30-year or the 10-year or, the 2-year treasury? It's a 25 basis point cut. what that means for individuals, 0.25, a quarter of a percent, probably not going to drastically change the game. But one thing you might notice is, hey, some of those shorter term money markets, some of those shorter term safe money options like CDs or savings accounts, those might pay a little bit less, right? And we've been over the last 2-ish years, we've been in this T-bill and chill kind of mode. One of the speakers alluded to this up at EAF, Tony, and it was talking about, 4% on safe money, on money market money. That's been kind of nice, right?
Right.
So if they drop some of these rates, which is, going to provide a boost to the economy, provide a boost to stocks, which is good for individuals as well, we might start to see some of that other stuff kind of not totally go away on a quarter point cut, but it's going to go down. Right. And so what does that do? Does that mean that I need to shovel all this money into the market? Maybe not. Right. Because that's an awful lot of risk. But you just have to be okay with being in a little bit lower interest rate environment. And they're talking about a couple other cuts maybe this year still too. So we'll watch that. And as we go through that, we'll definitely keep, our listeners, we'll keep our clients informed, and there's going to be options. I mean, there's still going to be places where you can go to get a good fixed rate, a good guaranteed rate, or, to still get some interest while keeping the majority of your money principal protected. So,
and that's the tough part as they cut rates. If rates do come back down some more, like they have recently, and they continue to do that, for those close to retirement or in retirement, there's positives and negatives to interest rates lowering.
That's all it is.
Mm-hmm. So it's good for the stock market and good for American companies that they can take out loans. Businesses can they'll hopefully more of them can spend more money, and it frees up money. They can get loans to expand or to hire more people, right?
Yeah.
And that helps, and that puts more money into people's pockets. It helps the economy. If companies do better, that helps the economy, and hopefully it will help people. Maybe it'll create some more jobs if they're able to get lower interest rates on their debt. Or maybe they're willing to take on some more debt to expand. And so that's a positive. And another positive is maybe credit card rates will go down a little bit. I mean, they're not beholding to that rate. So when you hear the rates are dropping 0.25%, doesn't mean your mortgage or your credit cards are necessarily going to drop, but they might. And hopefully they will eventually. And so that can be a positive. But the negative, you just said, is your safer money options or your principal protected options like CDs at a bank, MIGAs, which are like CDs. You usually can make a little more on a MIGA though. And that's a multi-year guaranteed annuity, fixed index annuities. Those are three of the things that a lot of retirees are relying on. And if you're looking at getting into one now, the rates are going to go down, or if yours is coming up for renewal, might come in at a lower rate.
It's going to change.
It's going to change. So you guys help your clients by adjusting to that in other areas, is what you're alluding to, right?
Yeah, exactly, Tony. And it's not a one size fits all, right? Obviously, there's options out there. Some people say, "Oh, I don't really like annuities. Oh, why would I, do guaranteed money here versus going in the market?" That's not necessarily what we're saying. We're saying, to create a well-diversified portfolio for our clients. That's what we like to do. It's what we like to see, but it's not going to be a one size fits all approach here. So if there's somebody out there listening today that says, "Oh, I kind of like to see maybe what, rates look like, what we can do with some of this stuff," feel free to give us a call. 402-557-6730 is our phone number. Justine picks up the phone when you call. She can get you an appointment with myself, with Bill, and we can sit down and talk through some of the things that we can do for individuals in this space. So there's still a lot of options out there, Tony. That quarter point isn't going to make or break people, right?
Right. It isn't, but it is something that you guys watch and look at. And like you said, there might be a couple more times that rates are lowered this year, possibly.
Yep.
The Fed might lower some interest rates some more. There's been a lot of pressure. And
Mhm.
so you can start to see some effects, and from that possibly. It's just something to keep an eye on. And it does matter. Like when people hear that in the news, does it matter? Is it going to affect your day to day? No. Is it time to panic or
Yeah.
make changes? Not necessarily, but you do want to regularly check in with a financial advisor, your financial advisor. And if you're not working with one like yourselves, I encourage our listeners and viewers to pick up the phone, give you guys a call,
Yep.
or check out your website, which is paradvisor.com. That's PAR advisor.com. And the phone number is 402-557-6730. Call and set up a no charge, no obligation consultation with Andrew or the team there. And that's 402-557-6730. And interest rates, we've talked a little bit about interest rates and markets.
Mhm.
Is there anything else on that you want to add, or anything else? What else do you want to talk about today?
So, Tony, the other topic I just wanted to bring up briefly is obviously for most individuals that are either turning 65 or over 65, we're starting to get a lot of calls about Medicare.
Because it's the annual enrollment period,
Yep.
AEP, right?
Yep.
When is that? What are the dates for that? It's October.
It's October 7th. They can start talking about things, and then it goes all the way through December
7th.
10th. Is it December 7th? Yeah,
I think it's
a 2-month
October
window.
10th through December 7th.
Yep. Yeah.
Honestly,
So
yeah.
2-month window where
Yeah.
anybody who's on Medicare can change their plan, and there are going to be some big changes this year. I mean, I don't know that I can necessarily speak about it because I'm not a licensed Medicare individual, so I don't want to say anything out of turn, Tony. But there are going to be some big changes. We've heard from Bill Kaiser, who's in our office, does Medicare. We've heard from Brenda, Dinan, who's in our office, who does Medicare. There are going to be some big changes coming down the pipe here that are, effective basically January 1. And that's going to change things for a lot of individuals in retirement. And it could lead to some more out-of-pocket expenses potentially. So it's really important for individuals as they go into this period to make sure that if there's something they can do to change things around or save a little bit of money,
Sure.
recommend sitting down with, either Bill or Brenda to discuss those changes. And same deal, no cost, no complimentary consultation with them. Call Justine 402-557-6730. Get on their calendar. They're doing some Medicare meetings. Mondays and Wednesdays at 10 a.m. for Bill. And then Tuesdays and Thursdays, 10 a.m. for Brenda during the week. So if you want to come with maybe a little bit of a group approach, maybe that one-on-one's kind of not your thing. We're also doing that this AEP as well.
Yeah,
so
I would encourage all of our listeners and viewers who are either turning 65 or past the age of 65 to do that and set up a no charge. Again, there's no obligation. Get your Medicare sorted. I would recommend the one-on-one if you can, or the group situation at least, because open enrollment or this annual enrollment period, I just double checked. It's actually October 15th through December 7th.
There we go.
So, and there are a lot of changes for 2026 that have been big changes for 2026 that you need to know about. And we'll probably pretty soon have Brenda or Bill Kaiser on to talk about those, but they're going to be very busy. So we'll try to get them on the show, or we'll talk about them further here over the next few weeks on the show. But you need to look at all your options and review those at least once a year. And now is the time. And don't wait. Set up a meeting now. And you don't have to wait till October 15th to meet with Brenda or Bill. You can meet with them before, and they can get you on the right path. So you'll be ready. You don't want to wait until end of October or in November when all the slots are booked. Book it now, get in there, figure out your Medicare, figure out what's going to work best for you. They're not going to try to sell or pitch you on any one thing or any one company. They're going to look at your situation and just help you. And if there's a Medicare Advantage plan out there that's right for you, they will help you. They will say, hey, they're independent, part of the Premier Advisory Group there. But they're not beholden to any company or any Advantage company or healthcare company. So they're going to look at all your options and say, hey, we look at all these options. Here's something that would really work. Or with your doctor or the hospital or medical group you're with or you've been used to here and you want to go to, here's this plan won't work, even though we've recommended a lot of other people, you're going to have to go to this plan. And it's almost as good, but it covers your doctors. Or you're really expensive. People might think, I think what I've seen out there, Andrew, and I've seen this with my own parents, is like, well, I'll just leave it as is. You know, set it and forget it. I don't have to do anything. And I've really worked hard. You know, I'm an only child and my parents are now both in full-time care. And I have to help them with this. And there's too much to do on my own. I can't do it on my own. And I know enough to be dangerous, but I'm going to Bill Kaiser and Brenda. Typically Brenda, if I have a choice. I mean, Bill's a little
bit easier on the eyes.
Bill's not much to look at. Let's be real. I'm kidding. Bill Kaiser's a genius. He's a great guy. They're both very good at what they do. But seriously, it's that important. There are so many changes right now. Costs of things are going up. I mean, drug plans, you don't want to just let your drug plan roll right now. Especially if you're on medications or any costly medications, you're going to have to get that looked at. Am I right?
No, that's exactly right. I mean, those out-of-pocket expenses are dramatically changing this year. And that's just, you do not want to let that go. And to go back to your point too, Tony, Brenda and Bill have, I would say, like 10 or 15 different carriers they work with in Omaha, in the Nebraska area. And they deal with people outside of Lincoln, outside of Omaha proper. I think they even work with a few people outside of Council Bluffs, you know, because I know the radio show goes that way too. But they actually sit down and say, hey, you know, what are the medications you need? What are the doctors you work with?
Right.
This is the plan that I would recommend based on those criteria that you shared with me.
Right.
You know, they're not saying, well, United Healthcare is really strong in this area, and I don't know anything about you, but I think you should go United Healthcare. You know, that's not how they do that.
Or, hey, you need an Advantage plan. You choose from these two. No, that's not how it works.
No, it's an education piece first and foremost.
Yeah, it's very educational. That's a good way to put it. And you know, it's not all doom and gloom. There are some positive things with Medicare changes, but there are
some of the best coverage you can get, Tony. I mean, I'm younger, obviously, you know, spoiler alert, if people listening don't realize that I'm a little bit younger, but I am.
Younger than what? Than who? Me? Are you saying I'm old? Wait a minute.
No, Tony.
Did you just imply that I'm old?
No, but for like clients that are on Medicare, right? 65.
Right. Obviously, you're not Medicare age or anywhere close. Right.
Yeah. But I wish I had access to the care because it's great coverage.
Oh, man. If I could get on Medicare and one of those Advantage plans, I would absolutely love that. That's for sure. Well, hey, we're out of time. I just realized it flew by. Let our listeners know how they can get a hold of you, Andrew, to set up a consultation with you or with that Medicare team.
Yeah, absolutely. So if people would like to get on our calendar, please call 402-557-6730. Or you can go online to our website, paradvisor.com. And you'll also find some links to some seminars that we're going to be doing in October, the 16th and the 22nd, 6 p.m. at Cascio's here in town. So just feel free to reach out. Thanks, Tony.
All right. Well, thank you so much, Andrew. And listeners, that does it for today's episode of the Big O Money Show with our host, Andrew Galvin.